Greetings, Dr. Jeffrey Scott, and this is my weekend market update for the week of Sunday, March 24th, 2024. I typically do these sometime on Saturday, and this is going to get posted late Saturday evening. I title this A Bullish Response to the Fed. My email address is hgsidoc@gmail.com. I am happy to respond to comments, constructive criticisms, and whatnot, either via the remarks section of YouTube or email me if you have any questions or anything I can answer about my indicator packages and things like that in the different platforms. If you're new to my channel, welcome. Thanks for being here. Please hit the subscribe button if you like this. Hit the alarm so you'll get notified when they post. I don't keep a mailing list, so I don't send it out to anybody to let them know. And again, feel free to comment if you would like to. Thumbs up are good as well. Education only. Anything I talk about should be considered in the spirit of education, not investment advice. I don't have any of the licenses. In fact, I have a medical license, not any kind of licenses from a trading perspective that would give me the ability to tell you what to buy. Plus, I don't know all about your holdings, your risk tolerance, and the like, things that are important before one makes a sound like a doctor, a purchase trading decision. I'm independent. I do have tools on wealth charts, which I'm very appreciative of Rob Hoffman, the great work the team does. I also have some tools, TradeStation and TradingView. Trading involves risk. You are solely responsible for any investment decisions that you make. That's me. Was me before Manjaro and a lot of weight loss. The Wealth 365 event is just a few weeks away. Would love to have you there. I haven't figured out what my session will be yet. I know what I'll talk about, which is typically swing trading while working for a living, but they haven't told me my date and time. Typically, I'm on Saturday or Friday. But love to see you there. The link for sign up will be in the remarks section on YouTube if you want to just cut and paste. Doesn't cost anything. And again, I don't keep a mailing list. They don't give me your name and your email either. If you like these, you can come to the website stocksanddocs.com, and I put something out there daily. This weekend is the Palm Beach Boat Show. I'm buying a new boat, and I'm going to call it Stocks and Docs. My wife gave me permission. Those are typically 5 to 10 minutes long. I don't get them done every night. A lot depends on my schedule or every morning. But they're very quick comments about what I think about the market, the leading industry groups, and if there's any stocks that I'll be looking at in the coming day. I always want to look at the major markets. The major markets are in yellow, and everything from where the yellow starts is green on the 5-day. A super strong market, although Friday was not so hot, and we'll talk more about that. Big winners on the week: shorting volatility, the 3X, the FANGs, IBD 50 small cap growth were the big winners, and you could see that the NASDAQ complex was up 2.9, S&P 2.2, NYSE 1.5, Dow 1.9, and even the Russell was up 1.3. Now, Friday was at best a mixed day and a tough day for the small caps as the Russell was down 1.4%. Perhaps there was some profit taking on the Russell. Notice over in this column how long it's been since the 50, or how far we are from the 52-week high. And then you look over here, the dates. All the majors have hit 52-week highs within the month of March. The Russell has not set an all-time high, which is different than the other majors. Sector-wise, the only sector that was not up on the week was real estate. If you look at the big winners, industrials 2.6, discretionary 2.6%, 3.2 for communications. Now, this actually looks at the S&P 1500, and that's an important distinction because anything based upon the S&P 500 is going to be looking at predominantly large caps. This is looking at large, mid, and small. S&P 600 small cap, S&P 400 mid cap, and the S&P 500 large cap. On Friday, all the sectors in the S&P 1500 were down, 88% of the industries and 79% of the stocks. So despite the fact that you could say the averages were mixed on Friday, it was a tough day in the market. If you look down here, you could see Friday. You could see on the week, though, a very different picture, almost a exact opposite. All the sectors were up on the week, most of the industries and most of the stocks. So is this a shot across the bow of the bulls, which was the original title for this week, but I didn't want to sound that bearish? Or is this the beginning, and is this the beginning of something worse? Or was it just a one-day profit taking after the Fed-induced rally on Wednesday afternoon and Thursday? Time will tell. If we look at the breadth indicator, this is the market breadth tool from Sagar, is Q Tools, and the blue lines are bangos. The bangos are sort of the opposite of the baby out with the bathwater. They're the signals of irrational exuberance, as often mentioned in the past by Alan Greenspan. The skull and crossbones are the Hindenburg omens. And you could see that as we've run up on this index, which combines the NASDAQ and the NYSE, we are getting lots of signals that tell you the market's overheated and subject to a pullback. And with those Hindenburgs, it could be a significant pullback. If I look at the NYSE, notice how the NASDAQ is still in a downtrend on this yellow line above the 50 and the white line above the 200, while the NYSE is in an uptrend. So the markets are still divergent. Most of the bangos are occurring on the NYSE, but as you can see, we've had bongos on both the NYSE and on the NASDAQ. This is the Nick Drendel tool that I like to watch during the day in the market. So if you look over here at industry group performance, you could see only two of the ones that are tracked here were actually up on Friday. If you look at the week as a whole, most things were up. So Friday was perhaps an aberration. You can see we're popping up some new lows on the NASDAQ, not so much on the NYSE. Rates. The Fed was interesting. I heard somewhere that the PCE, which comes out this coming Friday, was leaked. The Feds were a lot less dovish than I would have expected. In fact, the likelihood of a June rate, as priced in by market participants, actually went up after the Fed minutes. Now, they did cut out one of the potential rate cuts in 2025. They left 3 in the rest of 2024. But they did talk about quantitative easing or stopping the tightening, and that I think had a lot to do with how the market rallied. You could see in white the 10-year came down a bit, 2% on the week. In white, the 30-year came down a little bit less than 1%. So markets up, rates down. Is there a recession in our near future? We have the yield curve, 10 minus 2 on the left, 10 minus 3 on the right. Then you have this black line, which somehow got messed up here, which represents the zero line. Typically, you get these gray bars after we come back above the zero line. We are nowhere close to the zero line on either of them, and nothing that really suggests to me that we're going to get there in the next week. If we look down here at the Bank of America U.S. High Yield Index Option Adjusted Spread, which would measure credit tightness. Notice in times of recession, we have tightness of credit, we have none. And then this little line here above this black line is a measure of economic activity. Recessions occur when that measure is below minus 20. We're above zero. So nothing to me that says recession's coming anytime soon. And I'm sort of been saying for a while that I wouldn't expect a recession until after the inauguration of the second term of one of the the current or ex-presidents running. Breadth, you know what? This is wrong. Breadth actually improved on the week, so that is a misspell. New highs, and you can see stocks above the 200 went up, stocks above the 40 went up, and the 13-week new high, new low turned up, but is nowhere close to overheated. So note there is a mistake in my slide. Sorry about that. I look to check things, but every once in a while something will break through. AD lines. I've identified for you each of the yellow line represents the AD line, the blue line, the underlying index, and the two that are concerning mostly sort of this clear divergence on the NASDAQ composite, none on the 100, none on the 1000. What do these two have in common? These are large caps. The The Russell 2000, a bit of a divergence, but it's really the broad-based NASDAQ composite. Current buckets, despite Friday, two-thirds of the stocks are above the midline of their Bollinger Bands. No signals of overheatedness or over coldness, I guess would be the opposite. So we've got the Hindenburg omens, which I've mentioned. At some point they'll start to get old enough, certainly on the NYSE. But the thing that's most notable, we broke 20% 52-week new highs on the common stocks in the NYSE. That is a remarkable event and doesn't occur very often. Does that negate the Hindenburgs? Does that tell us that it's clear sailing? It could. Notice there's not many new lows there, but the NASDAQ looks very different. So I continue to be a little concerned that we're going to see a pullback, but extended markets with divergences can continue to run much beyond what I would say they should run or you might think they would run. You can't predict. You have to react. And here are stocks based upon ERG. ERG is EPS rank plus relative strength plus group. Notice that all ERG numbers until you get to here were positive on the week. And this tells you here the number of stocks. And there's like 3 or 4 stocks here. So I don't look at the first 2 here. I don't look at these 2. And when I look at it, it was pretty flat with some perhaps improvement as you got higher growth. Now you could see here, looking at just relative strength, you certainly outperform with better relative strength. Know your news and earnings. On the left are arrows that say, hey, we have a Fed speaker, and we've got them coming out even before the market opens. Atlanta Fed, Bostic, and Gosby from Chicago are speaking. I would not be surprised if the Fed isn't thrilled with the exuberance that came after Powell's announcement and his speech and his Q&A. And when that happens, you expect the Fed to talk down the markets a little bit. We got some GDP and jobless claims, consumer confidence, got some labor stuff. But I think the big thing is going to be that PCE that comes out on Friday. Now, I tried to find proof of this, but I did hear on CNBC that the PCE might have been leaked. And, it is possible that the Fed got exposed to a PCE that was much more tame or tamer than the CPI and the PPI, and maybe the Fed saw something that they liked. We'll see. Still a lot of earnings this week. As I say in the lower right-hand corner, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So it is now official. We are holding the Orange County Trading Seminar June 7th through 9th. June 7th, if I'm correct, if I remember correctly, is Thursday. We'll have a meet and greet on Thursday night. And then Friday and Saturday, we'll have all-day presentations. I will be doing many of them. We'll be joined by Dave McMullen out of Houston, who's just a fantastic trader, a brilliant man. Dev Kashev, and then Chris White, the proprietor of EdgeRater. We'll all spend some time at the podium. It's been a great event, even though it's far away from where I live, down in South Florida. It's something I try and I attend both as an attendee back when George Lee, may rest in peace, was the headliner, to today when I'm one of those. So love to see you there. Greg Mills, David Larson are the contacts. There's only 20 seats live. When we fill it up, we'll make a decision on internet. I can assure you it's much better being there than online. And frankly, it's hard to do justice to the people that are in the room if I worry too much about the internet feeds. We record everything live. We have handouts. And again, it's a great meeting. Not sure what the price is going to be. My guess, and I'll try and get more information from Greg, is right now it's more of an intent to come, not a commitment. And then the price will be figured out by the number of attendees. Typically, this is $500 or less. It's a low budget meeting intentionally. And you can see everything you need to know right there. Lastly, so strong showing on the week. Three majors finished at record highs. Gains were in response to what was perceived, and I hope it wasn't incorrectly, as a somewhat dovish Fed. I do think perhaps overdone, in my opinion. Friday, the market changed with some damage under the indices, albeit at low volume, which is good. Um, I continue to be suspect about how long this run will go. And although I did increase my participation, I still have stock on or cash on the side, and I'm not margined. And this week we have plenty of Fed speakers in the PCE to let the air out of the bull balloon. No, I am not a bear. I'm a realist, and this market, as we'll look at more, has had quite the run, which is frankly super exciting. But at some point, it's probably going to stop going up. So this is wealth charts. As I mentioned before, I have my tools on TradingView and TradeStation as well. Wealth charts, you get the best deal on the program. It's a very complete and wonderful program with great support by Rob and others. And that's where you get the Wealth 365. They offer the best deals of the year. Plus, you can purchase things like my add-on and other add-ons at the best price each of the year at that time. So here is my simple, what I call my simple weekly market timing model. I have two things. These are weekly charts of the spider, the Qs, the diamonds, and the Russell. My main direction is determined by this model. Notice we are at all-time highs on the spiders. This was the high before the market died at the end of 21 going into 2022. If price is above the white line and the bongo is green, then I am long the market. Notice how price was below in red and I was short the market for much of this beefy part when the market rolled over. Spiders are in a buy. The Qs are in a buy. The diamonds are in a buy. And even the Russell is above the 30-period WMA and the bongo. Again, these are weekly charts. All of these, except for the Russell, have taken out the prior highs. Exciting times there. Now, I do look at a daily model for fine-tuning. It gives me a sense of conviction, and you could see that on the daily model, all the prices are above the 30-period WMA. Now it's a daily WMA, and the bongo's now a daily bongo's green. So I see a strong signal on the buy side. I'm just hesitant because of some of the divergences I mentioned, the Hindenburgs and the Bangos. Market wants to go higher, and that's the way I think you have to be leaning until it changes. Let's take a look at the spider. Let's go to the 5 minutes, and let me just add the tag here for Friday. I like to put the dates on as I come back and I look a lot about what happened in the market. All right. I don't know why I type test when I want to type Friday, but let's try that again. Friday. There we go. Okay. So what do we see here? We see, let me back it up a little bit and hit the check mark there. So this white line was where the prior week closed. You can see the positive bar of the prior Friday. So we can see the entire week that we just went through was above the prior week's close. So we never touched the prior week's close. We gapped up Monday, lazily pulled back. Little gap down Tuesday and traded up and closed at the high of the week. And then at that time, then Wednesday was a flat day until the Fed statement, and boom, a number of moves leading to a gap up on Thursday. But then the market sold off into the close on Friday, and I think some of that sell-off, although the indices, especially the large caps, were still positive. Some of this was, I bet, some profit taking after this exuberant move. But a positive week nonetheless, never touching the prior week close. If we look at the spiders, as we saw on the timing model, all-time highs, pull back a little bit on Friday, 0.19%. If all we're going to do here is put a little bit of a flag before we go higher, fine with me. Similar findings here on the Qs down, excuse me, up 0.11. The diamonds, a little consolidation up at a high, down 0.81. A little bit worse looking on the Russell, minus 1.38. But on the week, the Russell had a strong week and was the leader, one of the leaders on the week prior to Friday. I think they were up 1.3 even despite what happened on Friday. Strong week in the market. One might expect some weakness in the VIX, and you can see the VIX is down at closed at 13, down 9.37 on the week. The dollar popped up some. Now, this line in here is a line that has been resistance on the dollar a couple times. We did break through here, and the market came down. So we got the 200, we've got the prior resistance, and I'll be watching closely for that. I think if the dollar starts going higher, then that's bad news for the U.S. stock markets and probably the commodities, which have been leading recently as well. Speaking of commodities, with the dollar up a little bit, gold was down 0.8, silver was down 0.4, oil was down 0.18, and natural gas is still dead to me. On the 10-year, the 10-year on Friday was down another 1.24%, and this is the white line here that represents where it stopped multiple times on the way up before, and it held again, which is great. It's come back to test the 200, so if it was looking to bounce, this is a place, and you could say that there is a trend channel perhaps that's heading higher on the 10-year. We've already looked at the timing models. Very quickly on breadth, you could see we're still favoring the large caps on the S&P 500. This is a ratio chart. When it's pointing lower, it's favoring the large caps. When it points up here, it's the non-cap weighted RSP. Same thing on the Qs. Down here, it favors the large cap. Up here, the equal weights favoring the larger caps. Nothing spiking on the spider i.e. IHYG looking for credit tightness. We don't see anything. This is a spider TLT, no spikes there. Really don't see anything new there, still favoring the cap weighted. If we look at the sectors, remember this is sector ratio charts relative to the S&P 500. Relative to the S&P 500, that's the key. When I looked at it, the best was in industrials. Energy looks pretty good. Communications doesn't look bad. And that to me was where the strength and the defensive stock sectors, the staples, the real estate, the utilities, and healthcare in general just looked bad. Biotech had a tough week. This thing ran up a lot at the year end, but seems to be giving some off back at this time. So one of the reasons why I love wealth charts is so how easy it is to do ratio charts. And then the next thing I do is I go into the stock scanners. I like to look at the markets from a heat map, just a very quick look, and you could see a mixed day on Friday. No surprise, Nvidia was up. In fact, it was up almost 30 points. And if the stock wasn't 942, a pullback in an uptrend is the kind of pattern I love to buy, just things getting extended. So you have to be careful. Wealth Scanner, this is a list of a lot of ETFs that represent the markets, and I'm asking to rank it. So as I look through, notice we only got one thing above 800. A week ago, we had plenty. So that shows to me that in general, this market has weakened. I think we all know that, even though the indices and the all-time highs are hiding it. What's up at the top? Japan, Spain. Well, I'm not buying those. Mid-caps are holding up okay. It did have, I don't know if it counts as a bearish engulfing pattern, but had a reversal candle on Friday. Aerospace, mid-caps. That's interesting. Home builders. Yep, they've held up despite the rates. Home construction, retail. But notice, none of these are above 800. Now, I did mention that I have tools and other platforms, and just to give you sort of a glimpse of what I'm talking about, and this is weird with TradeStation, always jams when I try to move it over for a second. Something tells me it's because how much stuff I'm running on my computer, but whatever. So basically, in TradeStation, what I do, I've built something I call max ETFs. It's the same ETFs that I'm looking at in wealth charts, and I can rank them by force. I can rank them by relative strength, percent change, rate of change. And so I could bring the things that are moving the most up to the top. And then I have the ability to then, let's say, home builders were doing well. So I might want to go down here and I can data, add, symbol list. And let's look in the custom ones. And I suspect I'm going to find something for home builders. It might be called ITB. And these are and I could then list these and look at which are the ones that have the greater force. If I want to do it by force, something I've used for years in HDSI, one of my other favorite tools that I use. So I could do by force, Lowe's, Floor and Decor, D.H. Horton, Lennar, Home Depot coming up to the top. There are a number of ways that I can rank them. I also have created the scanner that I use in TradeStation. So you can do the same thing, and it gives you similar, if not the same results as wealth charts. But for those that have TradeStation, just contact me. My email address and everything are at the beginning of this, the hgsidoc@gmail.com. Why do I do my demos with with wealth charts? Well, it's pretty simple. It's easy to use, and if you're like me, that's important. Plus, not only is it easy to use, it's all one program and really has built in the tools that I like to show you. So there are several things that we can do right now. I like to go to my CAT scanner, and my CAT scanner is how I rank and find some of the leading stocks. Now, if I look at all the stock symbols in the market, and I rank them by dots, and I'm looking here for pullbacks in uptrend. I've only got one ticker with 3 or more dots. That is almost bizarre to me. Never happens. So this market, which is a basket of stocks, not just indexes, is not that hot. Now maybe it's because they're all rocketing away. So you do have a couple things up here with more than 2 or 3. Outlook Therapeutics, don't know anything about this, even though it's healthcare. Kind of doing nothing. Had a big volume day on Friday and had volume breakout momentum from a squeeze. This is my high-low oscillator. When it's more than 95, I don't take longs or I'm careful. If it's less than negative 95, the same thing to the short side. This is the relative strength breaking above its moving average. This is on balance volume breaking above its moving average. That looks very strong. This is a 200-day moving average, and I don't like to buy things right under the 200-day average, moving average. It is often going to be resistance. Now there was news back here. It had an announced split, 20-to-1 reverse split. Bye-bye. I'm not interested. I don't buy things that have reverse splits like that. Typically, that's not a sign of strength, and you could see that this stock really came down from higher numbers, prompting that split. All right, so we skipped that one. Embraer, ERJ. This is a beautiful, they make planes. And nice stair-step move. These triangles, which you may not be aware of, is Rob's Launchpad indicator. It's an exclusive indicator. The round is wealth signal. The triangle are my EMS signals. This thing is doing great. But notice how extended it is from that 200, and the high-low jump is 100. Splunk, I'd have to look at this. That has the look and feel of a takeout. So let's see if something got it. My guess is there's a takeout here. Downgrade to market perform sector weight. Yeah, that's got to be a takeout, so we don't really care about that. And that's it on the 4s and 3s from the rockets. How about everything that's got momentum up? This would be every stock in the market. Clear, secure. Don't know much about them, but here's a stock that's failed at the 200 multiple times. It had gap, volume breakout, momentum. It's not extended. Relative strength and OBV look good. Um, maybe it's going to be great, but it better clear the 200 before I get interested. There's that bond thing again, the BNDX. Here's the Embraer. And then FedEx had great earnings, and you could see what happened with the earnings here. Now, we used to get earnings in wealth charts, and I know that that and the hot stocks feature must have broken when they did one of their updates. They're constantly adding really cool things to the program. So I will often go into TradingView, where again I have all the indicators that are in wealth charts and TradeStation, and I also have this thing in the middle here. In fact, let me make that a little bit bigger and easier to see. Let's make the text size normal. And so let's go to FedEx, FDX, and you could see FedEx. It's going to open up the earnings here in a moment. You could see it had a 12% surprise on earnings, although no surprise on revenue. Next earnings are June 25th, and this was made by Praveen, who does the coding on on TradingView, and you could see the earnings was right here, and even in the built-in TradingView, it shows a 11.53% beat, rounded up to 12% there. Not much of a difference, down 1.15% on revenue. That feature I'm sure will be back in wealth charts before too long. It was one of my favorite features when I started using it. And I miss it. All right. So the point that I'm making here is there's not a lot of momentum that occurred on Friday and a lot of things that are moving up. Foot Locker, big dump, probably on earnings. Hard to be attracted, or was it in response to Nike? I can't remember. So again, I'll have to pull up my TradingView to find out. I'll type in FL. I'll look at it, and their next earnings, let's see, their earnings was here the day they died. So that's why knowing the earnings date is so important. What else? Splunk we know is an issue, and then I don't know Stavanto Group, but this is a very sideways chart, not that exciting. So if you watch these things on a regular basis, sometimes I only look at 4s and 3s. Sometimes I never even get to the 3s. So that just tells me that the market really cooled off on Friday, much more than the indexes tell us. So let's just look at pullbacks and uptrends, because there's some things here I like. So Best Buy, I like to buy my computers there, mostly because they have a lot of different things in mail order that I can pick up at the store and sneak in the house so my wife doesn't get mad at me. Yes, that happens to me too, but they also have a great return policy if I don't like something. Best Buy, not doing much here. Looking at the weekly, it's still within its range. Decent volume, had a bunch of green dots in the squeeze. Probably worth watching, but I'd like to see it clear certainly the close of this bar, or the high of this bar, which was 86, before I got that excited. I don't smoke it, but I might want to go buy it. Canopy Growth, if we look at what's been moving of late, there's been a lot of movement in the marijuana space. And every time I bought into this space, I've ended up losing money. But look at this chart. If this was a technology stock, I'd be getting excited. It's broken above its moving averages, including the 200. Massive volume. Breakout and momentum signals. Not extended. Great relative strength in OBV. It's a cheap stock. Probably too cheap for most people to buy. But for several weeks, cannabis has been running. So Canopy Growth. All right. Next one. CX. Yeah, a lot of the cement companies look good. This is a cheaper one. It's in an uptrend, kind of a cup handle and a breakout, massive volume, relative strength and OBV look good. CMX, X. None of these things are totally setting me off on fire, but those are okay looking. Cryoport, just kind of busy. It's gone sideways for too long, which is great. But when it's done that, I want to wait till it breaks out of the range. Now, it's close. Didn't have much volume on this move, and that's the other thing I'm not thrilled about. But this one I'll be watching. Fresh Pet, big move up here. Sideways move and now breaking out. This does interest me. FRPT. I won't say people complained, but they did ask if I'd mentioned the tickers. HROW, Hero, below the 200. Are you starting to see a pattern here? The indexes look great. And yes, if we look at NVIDIA, it looks phenomenal. But what doesn't look great is the underlyings. And that tells me to be careful. It goes back with sort of the comments I had earlier. I looked at my 1,000 stocks this weekend. I don't pick the best stocks who've had the biggest moves when I put my buy watch together. And that's because many of them are extended. So this is not a list of all the great stocks. This was the list of the ones that made it to my watch list. This is the ones that had a pullback in an uptrend signal. So Best Buy we already looked at. Again, I'd like to see it clear this area. It's sort of right now where it opened the day before it pulled back here. We looked at Canopy Growth. We looked at Fresh Pet. On my stocks and docs this week, I highlighted Allstate. I still like Allstate here. Allstate is an insurance company. Insurance companies have been all over the list. Sideways move, catching up to moving averages. This was the day I highlighted it, or the following day with the big volume. Not extended. Relative strength and OBV look good. I still like that. Black Diamond Therapeutics. Don't know anything about it. Can't vouch for it, good or bad. Cheap biotech. But breaking out here, good volume. It's worth taking a look at. Google, not a small name. Someday it's going to break out of this period here. I like watching this. I'm not sure I'd be buying it right here, although it's kind of getting close. Take out this high, I might be interested. Micron had great earnings. Maybe now it's going to give us a flag and give us a chance to get in at a lower price. If I look at the broader list of my buy watch, again, I hope you're not getting excited because there's not that much that's actionable. Just going through the list, Arista Networks, what a beautiful chart. My God, just like NVIDIA. But can you buy it up here? Look at the high jump. It's at 100. I'll answer it for you. I won't. No. ACV auctions actually look pretty good. It's not as extended because here's the 200. I don't know. It made my list to watch. I don't love it. ANSS, and I do like stocks that have been in an uptrend here, that gap up, go sideways, and start to run again, and that might be happening there. One of the ones that I own and been very happy with is AppLovin, but look at AppLovin, it's at 93.8. It's getting to an extended point. CCJ, one of the uranium companies, looks to me like it might be setting up to run. It's coming out of a squeeze. Relative strength and OBV are picking up. Let it clear the 50. Perhaps my favorite chart in the market, or favorite, is CrowdStrike. This was on somebody else's news, if I remember correctly. Let's pull up its earnings because this thing is pretty phenomenal. Let's look at CR. It's going to be much easier when it gets fixed in wealth charts. So the earnings in March, 15% beat on earnings, 1% surprise on revenue. It beats every time on earnings and revenue. There's a reason the stock is sitting where it's at. Notice a automated generated trend line, and how we've pulled right back into the trend line. And every time we've hit this trend line, CrowdStrike has been attractive. So earnings are out. Um, the earnings date was here, and you could see it had a big gap up, but came down at closing. And there was other bad news that session, if I remember correctly. But CrowdStrike was not the problem. So let's go back in wealth charts, and you could see a beautiful run up sitting on the 17. One we talked about a couple weeks ago that had a nice breakout here was COLL. It's getting a little extended for my taste. And cruise lines, I live down in Florida and cruise ships are packed. This is Norwegian Cruise Line. The earnings look pretty good going forward. This is another thing that I'm watching. I wanted to clear in this area here before I got too excited. And Royal Caribbean has been just a dynamo. You can see it better on the weekly chart, the run up with the recovery. So I haven't shown you a lot of great stocks. I've shown you a lot of, well, I haven't shown you a lot of great actionable position stocks. There are some pretty charts out there. There are things that with a little bit of setting up could run. Here's one, Root. What a beautiful chart. I got a feeling this is not a Reddit, but a Wall Street Bets type of a story stock. And I don't know if they think there's a short squeeze. You can check the news yourself. This thing has just gone crazy. 22 and 40, 13, 12 price targets, 12 price targets. It's trading at 54. Somebody loves this. This is one you got to be careful of. So there you go. I gave you a hint of what I'm looking at in the market. What are my take homes? Market stretched and the underlyings are not looking great right now, which tells me maybe this market's needs to take a pause to refresh. The leaders continue to do well. CrowdStrike and NVIDIA are two of the leaders. But again, it's the other stocks that are concerning me. So I think the message to be careful continues to reign true. I hope you don't get offended by me moving in and out of different platforms. I just need to have those earnings dates, and hopefully they'll be fixed soon in wealth charts. I hope you have an awesome week. I personally think the Fed heads are going to talk down the market, and I think that the market's probably going to rest this week at best. Have a great week in the market. And just as an aside, I've got a busy week of travel, busy couple of weeks of travel coming. I'm going to do my best to get this out the next 2 Sundays. I don't miss many, but if you don't see it next Sunday, don't be surprised because I'll be out of town and I didn't have a chance to do it. Take care, and if I'm not here next Sunday, hope you have a happy Easter, and for my Jewish friends, have a good Purim.